Hey guys, as I'm visiting Shrine now, I would also like to take some time to reflect 2024 as the year is coming to an end soon. 2024 has been a really good year for investors. The market provided a return of over 20%. My personal portfolio did a little bit better at 30% thanks to some winning stocks, and of course there are some losing stocks. Surprisingly, my largest losing stock is, wait for it, is Amazon.
If I had been patient and focused on the long-term potential, I could have turned my losses into significant gains as of today.
Amazon, a tech giant that focuses on e-commerce and AWS. So Amazon needs no introduction. It is one of the Magnificent Seven with good business model. This stock actually outperformed the market with 50% of increase in price. But I ended up losing. Let me share with you my story, the lesson I learned, and how you can avoid making the same mistake. So stick around.
I started investing when I began working in Singapore. With more disposable income after paying all my daily expenses, I decided to put my extra money to work. Like many beginners, I learned about investing through courses, online videos, and discussion on the community platforms. But let me tell you, knowing and doing are two very different things. When real money is on the line, emotions come into play and mistakes can be costly. This year, I was particularly bullish on tech stocks, including Amazon. It has strong business model, dominating e-commerce, cloud computing, AWS, and advertising. Seems like a sure win, right? But as we all know, the market has a way of humbling even the most confident investors. Here's the turning point. In August this year, the market saw a sharp dip after Japan raised interest rate for the first time in over a decade. The ripple effects hit global market, not only the US market. And Amazon stock dropped from the peak of $200 to $160 in just 2 weeks. While Amazon also rebounded strongly afterward, I had already exited my position at a loss that time. Here is what I went wrong and what I have learned that I would like to share with you. Firstly, over-leveraging with options. One of my biggest mistakes this year was over-leveraging with options instead of buying the underlying stock right away. Options has 100 shares per contract, meaning it can magnify gains, but it also magnifies losses because they use margin using borrowing, not my own cash. So when Amazon stock dropped sharply, I faced a margin call and was forced to sell at a loss just to maintain my account required balance. The losses spiral and my position unraveled. What to do instead is to stick to simpler strategy like buying the underlying shares with the cash I have. Unless you fully understand the risk of margin, so steer clear and not to over leverage. Second, investing in stocks without true conviction. So Amazon is undeniably a giant with a strong economic moat, dominating industry like e-commerce, cloud computing, and online advertising. But here's the truth, I didn't have real conviction in the stock. Personally, I rarely shop on Amazon and often buy from other platforms instead. So this lack of belief made it easy to panic when short-term volatility hit. Without confidence in Amazon's long-term potential, I sold too soon. So here's what to do instead. Only invest in companies you truly understand and believe in. Strong conviction will help you stay steady during market turbulence. Third mistake, listening to naysayer instead of doing the research. This year, someone warned me about Trump's possible re-election and the renewed US-China trade war. The fear was that tariff would hurt Amazon as many third-party sellers rely on Chinese manufacturing for inventory that will import and sell on the platform. So I let this narrative shake me, but in hindsight, it was just noise. During the previous trade war back in 2018-2019, Amazon thrived thanks to its supplier network and the rapid growth of its AWS cloud division. So here's what to do instead. Block out all the noises and trust your own analysis. Speculation and rumors often distract from a stock's fundamental. Fourth, running out of liquidity at the worst time. I sold a naked put option on Amazon stocks, expecting the stock to stay above my strike price. But when it dropped below during a market dip like that, I was forced to exercise the options. This means buying the stock at a loss. And worse, I didn't have enough liquidity to hold on to it. To cover other short positions, I had to sell parts of my Amazon holdings. Unfortunately, by the time the stock rebound, I was already out of the game. So here is what to do instead. Always maintain a liquidity buffer, especially when trading options. Selling naked put is extremely high risk, especially when you do not have the liquidity, because it can lead to unlimited potential losses. Having liquidity gives us the flexibility to hold during market volatility. Fifth, focusing too much on the short term. So Amazon is fundamentally strong company with consistent revenue growth and solid earnings. But instead of holding onto the stock for a few more months, I sold prematurely due to short-term concern and liquidity issues. If I had been patient and focused on the long-term potential, I could have turned my losses into significant gains as of today. So here's what to do instead. Trust in the fundamentals of quality stocks. Long-term holdings allow strong companies to recover and thrive. So here's my final thoughts to turn the mistake into lessons. Reflecting on my experience, I realized my mistake boiled down to poor risk management, lack of conviction, and short-term thinking. The lessons: over-leveraging amplified my losses, doubts over Amazon business model and external rumors shook my confidence, lack of liquidity forced me into a bad decision. If I had used long-term options like LEAPs, instead of short-dated ones, or simply just held the underlying Amazon stock outright, this story could have a completely different ending. LEAPs are especially effective for companies with strong fundamentals and growth potential, as they allow for long-term growth while limiting downside risk. What about you? Investing is a journey, and mistakes are parts of the process. The key is to learn from them and grow. What lessons have you learned from your investment this year? I would like to hear your experiences. Before that, give this video a like and subscribe to our channel, and it means a lot to me. Thank you for watching, and see you again in the next one.